Welcome back to Upside Down Data. Let's talk about where Bitcoin is going from a data-driven perspective. So if you've been following the markets, it has been very exciting recently. Bitcoin blew up through 40K and has been continuing its moon mission, now trading above 41K. And this is something that you just really love to see, that Bitcoin does seem to be entering into this new phase and early bull market from all indications. So what I want to talk about in this video is where is Bitcoin going in the short term, and talk about what some of our models are seeing, but then also zooming out and thinking, where are we going in the longer term? Because in some ways, if we think Bitcoin is entering into a new bull market, what we really care about is where is it going longer term? Is the longer term outlook still bullish, or are there signs for concern? So I then want to flip over later in the video to some of our longer term looking models and see what they say. So the first model I want to talk about to think about Bitcoin's shorter term prospects is our short term upside downside potential indicator, or UDPI. This is a risk model that we have. So higher levels mean higher risk, lower levels mean lower risk. And one of the things that we saw leading into this recent pump up above 40K more recently here was a notable cooling off in the short-term UDPI. We had been up above zero at 0.76 roundabout, and then we cooled all the way back down to negative 1.34. So a significant cooling here. And this is one of the things that I wanted to see before seeing a potential continuation, was short-term risk cooling off, Bitcoin accruing more upside potential that it could go ahead and realize in the short term, and now it started to do exactly that. And the good news about this is that it's starting from this lower point. It might now have a lot of upside to work with. At the very least, we might expect to go and tag a similar short-term UDPI level on the upside as we did the last time, which suggests that Bitcoin might still have more room to run in the short term. We can also see, if we look at our trend confidence indicator for Bitcoin. So this is a model that cares about trend. Basically, the idea here is that if you see the TCI trending up, that is a positive sign, and oftentimes price will follow. If the TCI is trending down, that's a sign of weakening, and price will often follow to the downside as well. One of the things that I had noted in earlier videos and over on X was that the TCI for Bitcoin had been falling off aggressively here through this time, suggesting weakening. And though Bitcoin did continue to grind up in price, it was certainly a weaker move, and there was a lot of consolidation that was happening here. But then I mentioned that when we saw that reversal on the TCI, that would be a bullish sign. And indeed, it does seem like we're starting to see that form right here. The TCI is starting to move back to the upside. So we'll need to continue watching it, but that is a positive sign in the shorter term for Bitcoin. And if this positive move on the TCI continues, that just suggests that there's that continued support, and there might be a more aggressive move in the building for Bitcoin. So none of this is financial advice, of course. You should make your own opinions of this data and where you think Bitcoin is going. But short term, it does look like Bitcoin could be set up to continue to run a bit more. Now, how high exactly it can go in the short-term rally, who knows? But I do think it still has more room to work with. And if we just look over at the chart, we talked a lot about how the mid to upper 40Ks might be the next logical place to hit some resistance. And so it would not surprise me at all if Bitcoin managed to get up to the 45K range, even up to the 48K range potentially, in a more continued extended move here before maybe having to consolidate some more or even correct. But as I mentioned before, these shorter term considerations may or may not be all that important when we think of the longer term outlook. If we think that Bitcoin is in the beginning of a bull market, which signs currently point to it being, then we'd expect that 48K is not going to be the ultimate top. Really, we'd be targeting levels above the prior all-time high, like in previous cycles. And so then what can be useful is ignoring the short term to some degree and thinking more about, let's look beyond that. Let's look beyond the short term outlook. Let's look at the medium or even longer term outlook and see how that is shaping up. And should we expect this bullish, more longer term move to continue playing out, even with volatility along the way? So the first model I want to talk about when thinking about this is our forecast model. So this is a model that looks at what's going on in the market, and it arrives at a probability estimate. And that is the likelihood that Bitcoin's price in this case will be above its current level 6 months in the future. That is what this is estimating. And so the value is between 1 and 0. 1 would be 100% chance of upside in 6 months, 0 would be a 0% chance, and then anywhere in between would be anywhere in between, basically. And what you can see right now with the forecast models is behaving a lot like it does in bull markets. This is one of the things where when I flipped bullish back here at the beginning of the year, this is one of the models I was looking at quite intensely, was how the forecast model was getting extremely bullish through this time. Really, as we had the FTX collapse, you saw the forecast model explode to the upside. And then as we started moving up, it has stayed bullish this entire time. Similar to, for example, the whole bull run here until we started moving in to that all-time high and then things started to weaken. Same thing 2019, same thing with the bull run in 2020. And it seems like a similar behavior has been playing out again. So from a more medium to longer term perspective, this is exactly what we want to see. And this is another point in the favor, in my opinion, of thinking that we are in that early stage bull market. And that doesn't mean that it's just going to be vertical all the time in the shorter term, but it does mean the overall outlook is bullish, and that if you had to basically make a bet or place a guess on will the price of Bitcoin be above or below where it is right now, basically the model is saying that you're probably going to do better off being on the bullish side of that bet than bearish. And certainly being up here is way better than, for example, all the way down here like we were going into the all-time high back in November of 2021. And I think it's important to recognize the fact that there can be a lot of volatility along the way up, even as the outlook remains bullish. So to talk about this a bit more specifically, let's go back to the Bitcoin price chart here. And let's take a look at the 2016-2017 bull run, because I think this one, when you look at it, is one that a lot of people see as being one of the more immaculate cycles that Bitcoin's ever had. This nice parabolic move to this big blow off top. And I think a lot of people, when you look at it, think, well, this would have just been an easy time to be in Bitcoin. Think of how easy it would be. Look, price just goes up in this big parabola. But what you overlook is how much volatility happened along the way. Just look at this. Bitcoin had drawdowns into corrections that were 40%, 25%, 40%, 35%, 33%, 39, 40, 30% drawdowns all the way along this nice, big, overall, more macro parabolic move. And you'd better believe that during these corrections, during these deep corrections Bitcoin had, there would be a lot of fear in the market. Can you imagine right now if Bitcoin fell 40% to the downside from its current levels? It'd be pandemonium. The bears would be out there rejoicing, saying the recession's here, I told you the crash is coming, so on and so forth. There'd be a lot of fear in the market. But ultimately, it might just be part of normal price dynamics where things don't go in a straight line forever. You will have these corrections. Now, it's a question of whether or not we'll have as deep of corrections now. Bitcoin volatility overall has been decreasing, so maybe we're not in store for as many, 40% move to the downside. But if we go look at the recent move in this year, we can see we've already had some notable corrections. We had one back here that was 22% move to the downside as an example. We had one here that was a almost 20% move to the downside. And then we had another one that was around about 20% move to the downside. Again, pretty notable corrections. And each time, just remember the fear that entered the market when that happened. And that's probably going to continue playing out. And in some sense, that's actually a positive sign. That's a healthy sign. If you have everyone just euphoric and just thinking that price can only go up and are just thinking they're just going to buy every dip, then that can mean that the market's getting very overextended. People are way too positioned on one side, way too much leverage built up on the long side, which can then lead to things like this, a big wipeout. But as long as you see the greed staying in check and fear be able to re-enter the market with each correction, that's actually a positive sign. And so in an early bull market, you might expect that to continue. And in some ways, you might actually want that to continue. But importantly, it's useful to keep an eye on the broader picture. That instead of getting caught up in the narratives and the fear that can emerge, that's why I like having models like the forecast model to look at, because it helps me stay grounded and say, all right, ignoring all the people on X, ignoring all the people on YouTube, we're just going to be peddling whatever the most recent narrative is. What does the data tell us? Is the data still bullish or is the data bearish? And then we can react accordingly, instead of just whipsawing and buying the top and selling the bottom along with the emotion that tends to flow in the markets. So another model we can look at from a more longer term perspective is our momentum bias indicator. And this is another one I really like to look at to get a sense of where are we in the market cycle for Bitcoin. So as the name implies, this is a momentum indicator. So positive values mean positive momentum bias. That's where price will move up aggressively. Momentum is biased to the upside. And dips tend to be bought up relatively soon, even if they are relatively deep dips in percentage terms. But then what you'll notice in bear markets is these times where you have this prevailing downside momentum bias that really drags price down into the ultimate cycle low, which then leads into the next bull market. And the really interesting thing you'll notice is that throughout all the market cycles, it behaves in a very similar way as you go. You'll have this big euphoric bull market where positive momentum bias prevails. Then you'll have this bear market where negative momentum bias prevails. But then you'll have this kind of period here, this oscillation around zero. And this is an important behavior. So the MBI is a Z-score. That is the output. So zero is actually the average momentum in Bitcoin, which has been positive overall, given the massive price appreciation. And then values above and below are marked in standard deviation units. And so if you're just oscillating around zero, that's actually a good thing. It means you're not getting too extended to the upside, which tends to happen at these cycle tops up here. But it means that you're staying around a generally positive momentum bias, this kind of average level. There's volatility, which is why you oscillate, but you're generally sticking to that positive momentum bias that Bitcoin's enjoyed its entire life. And that's a good thing. That's a sign of a nice move out of a bear market into a healthier bull market. And then once you get into this euphoric phase where you're really spending a lot more time in the green than the red, that's where you're building up into that bull off top, where you have to start being a little bit more concerned that things are going to start getting overextended, too much euphoria, and then you might actually put in that notable top. But notably, we're not there yet. We are doing that exact thing we'd like to see right now. We're oscillating around zero. We're going up, we're coming back down, up, down, up, down, up, and then maybe starting to come back down a little bit. And so that's, again, where even if Bitcoin in the short term does end up finding resistance at its round about its current levels, right now 41K whatever, and let's say it has a correction from here, and then let's say that corresponds to us dipping back below zero on the MBI, that's totally expected at this part of the cycle. And in fact, this might be exactly what we'd want to see. And what it might end up really being in that case is just an opportunity. Imagine if Bitcoin were to go and eventually come back down, and let's say, for example, retest the 30K levels. Let's say even retest this former resistance. Well, interestingly, that'd be about a 23% correction to the downside, not too far off from what we've seen all year. There'd be a lot of fear probably in the market right now, but that might just end up showing up as very normal behavior on the MBI. And then if the forecast model remains bullish, that might just be totally par for the course as we go. That might just set up for that next leg to the upside from there. And that's where I think it's useful to zoom out for Bitcoin. But now we also need to consider the possibility that maybe one of these corrections will actually be for real. Maybe it will actually be that we're going to be moving into a recession, for example. And I made a video before where I talked about a recession, in my opinion, being the main thing that could derail this thesis of Bitcoin entering into a new bull market. And in my mind, it's really one of the only things that's out there, except for some really extreme, crazy thing that we can't really imagine now. A recession forming is probably the most likely thing that we could think of that could derail this thesis. And so then we need to think about, okay, what happens if we actually do have that? It's something we can't totally lose sight of or ignore. It's always a risk that we have to keep in mind. But then it's also important to think about, what would Bitcoin actually do in that kind of environment? Should we be as terrified of it as a lot of the people on X make us think that we should be? And this is something I've talked about before, but I think it bears repeating. So here I'm showing you the weekly chart for gold. And the reason I'm talking about gold here is that Bitcoin has, of course, been compared to gold, a bit of a meme currently, but it is a reasonable comparison. So Bitcoin being this hard asset that you can self-custody, that's separate from any given government, a global hard asset. That is, of course, what gold is often touted as being. And then useful thing to think about here is that when you look at recessions for gold, that's what these red lines are here, gold will oftentimes have a correction along with basically everything else in a recession. And when you have that recessionary crash, it tends to be all correlations go to one type of event where just everything sells off. Everyone's looking for liquidity, so on and so forth, as panic selling happens basically with every single asset. But then with gold, it tends to recover quite quickly. If you just look at prior recessions, gold will tend to enter a recession and end a recession at either a similar level or sometimes even at a higher level than the beginning. It'll either be relatively flat or up through the recession. And so even if the worst were to happen for Bitcoin in a sense, where let's say we actually got that recession, you'd probably see that initial crash like a lot of people think you would, or all correlations go to 1 would make sense. But it's actually totally possible that Bitcoin would not do what all the doomsayers say on YouTube and X and go down and crash down to, even sub 1,000 Bitcoin, for example, which some people have said. And maybe it actually does something more like gold, where maybe it chops around for a bit in the recession, but doesn't dip nearly as far as some people think it would, and then is able to really enjoy the recovery in a strong sense, like gold often does out of recessions. So something to keep in mind. Now, who knows what would happen? We haven't ever seen a full recession with Bitcoin. We don't know. But just something I want to put out there, because I think most people do not think that Bitcoin would do well in a recession. Most people think it would just collapse and fall off a cliff. But it is useful to keep in mind the different possibilities, that even when we're hedging potentially for a recession, we also need to keep in mind what would a recession actually look like for Bitcoin and what are the different hypotheses. And I'm just contending that there's more than one hypothesis that might be reasonable. So if we look across all of the data, then I think what we're really looking at with Bitcoin is signs pretty clearly that we're in the forming of a new bull market. And we're seeing positive short-term signs that Bitcoin could go further with this run, but really more importantly, longer-term signs that this is a bullish time in the market. And then what's going to ultimately come down to is, first of all, do we have that recession that all the doomsayers are saying that we will? But then even if we do, how bad is it? And in my mind, that's really the only kind of boogeyman that is out there. And unless that really forms in a meaningful way or comes to be in a meaningful way, it seems like Bitcoin is ready to do what it's done in prior cycles, build up its strength to ultimately build in to that big parabolic move later on. So time will tell how this all plays out. And of course, none of this is financial advice. You make your own opinions, but those are some of the things that I'm looking at right now for Bitcoin. So if you want to view live data from our models and more, you can go over to our website, polaritydigital.io, link in the description. And of course, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on X. A lot of updates, better models, and more over there.